Good morning, good morning, good morning. Today is on the 27th, one day to go for February to be over, and we enter into March. So yesterday, quick analysis, quick review on yesterday. Yesterday, we were looking for buyers above 29.23. That didn't happen. All right. But the sales below 29.11, they did happen very well, actually. We had this candle push down over here. We had this push all the way down. Then the market went back up again. So it gave the market, gave you actually a second chance to, if you missed this move, you could have actually as well picked the sell from this point as well and push all the way down up to where we are right now. Okay. So this is what I got myself. This is what I entered. I did an aggressive entry at this point. The moment it broke these lows of these weeks, I did an aggressive entry. Stop loss just above this point. Continue pushing down. The moment this candle closed, I extended my stop loss a bit up a bit, and I entered another trade over here, and we continue down. All right. Good. Right now, we're also pushing very well. You can see this was also another very nice entry. The moment this candle closed over here, you could have taken the sell from here and continued it down up to this point, and it's going to get to that point. But right now, it's a bit too late to enter. So if you've not taken this, if you're not already in this trade, just leave it. No need to enter at this point. It's gonna mess you up. All right. What do we have today? Fundamentals today, Thursday, we have GDP. That's going to move the dollar, of course, for 30, and unemployment claims. This is what we're going to watch for today. This is going to move the dollar. Good. Now, we remove everything. We do a fresh new analysis again, and we see how the markets is going to be behaving. Probabilities of setups, Zaleo. Look for some probability setups for today. All right, so we have the monthly support. Again, we still don't have the monthly resistance. It's like we are forming a weekly support resistance, but the weekly support will be confirmed when this candle, the current candle, closes. If it closes bearish, yes, they will have formed a resistance. But if it closes bullish above, then we will still not have a resistance. But as of now, that is what we got. We go to 4 hour to 1 hour, 1 day. Daily, we have a resistance already. We have a resistance already on daily. As you can see, the market tapped here and then came back there and then went down and closed bearish. I explained yesterday how a support or a resistance level is formed. All right. I'm not going to repeat that again. Okay. We're here again. This is the daily support over here. You see? This is the daily support over there. All right. Then I say we cannot ignore these points where the market goes up, down, up, down. You cannot ignore those points. All right. We are on H4. H4, we have a very nice resistance level over here, forming actually a letter M, a double top, if you want. And it's pushing the market down. That is where we were trading yesterday. Still, the candle was not yet closed, so there's a probability. You see the way the market was rejected over here, came down, got rejected, closed like that, came down, got rejected, closed like that. So as long as this candle has not yet closed, there could be another possibility like this, get rejected and then go back up. Or this time, it could push all the way down to this point. That would be actually very good. Let's look at 1 hour. 1 hour, what you get? What you get in 1 hour? 1 hour. So I'm gonna mark those areas. Those are very important areas where the market is now, where the market is facing some rejections right now over here. Okay. Same resistance, support is over here. And let's see how the market behaves now. Around this area, this looks like a very nice, is a range. So I'm gonna mark it like this. See this area? This is a range. I'm starting where the wicks, let me expand it a bit so that you can see what I'm doing. I'm starting where the wicks, the bodies have started over here and where the wicks are, okay? So where the candle is, the current market is on this support area. So should it break below this candle over here, probably you could take some aggressive. Go jump on some aggressive sells over there. Should it break? Okay. Inside here, we're gonna have the only way I can take and buy is if we break above this candle. And that's also going to be an aggressive buy. Because there's no place that we are doing actually a breakout. Okay. That's why I'm calling them, all of them aggressives. This one, this one is a breakout, but the reason why I'm calling it an aggressive is because I can see on the left side, there's a lot of consolidation and still the area is not that big actually. It's not that big of a room for you to say that you're going to hold it for 2 weeks or so, okay? But on the other hand, we do have a very nice push over there. Should we continue breaking down? Those are going to be very nice areas. Should we continue pushing up? I would expect some resistance at this level and at that level over there, like that. All right, so aggressive buys. So today we are featuring aggressive buys only. The aggressive buys, we need to make the stop loss the risk needs to be a bit lower. Whenever you're doing an aggressive entry, make sure the risks is not as usual as what you do when you're doing a confident trade. Okay. That's the reason why I usually tell you this is aggressive. I usually do that so that you can at least be able to mitigate your risk well or plan your risk well. And I told you aggressive is where we buy the chances of winning and chances of losing is almost the same. So that's when we do aggressive entries. All right, so now we're going to wait on that. Let's see how the market will behave today. Should we get some very good pulls over here? If we get a break above this point, we could do an aggressive, but be very careful with that aggressive buy. Again, I repeat, if we get a break below this point, well and good, we push market down. All right, guys, take care and have a good one. This is what we're looking at today. And happy hunting, trade well, risk manage well, trade what you see, not what you think. And see you tomorrow. Bye-bye, guys. Over and out.